Okay, dudes and dudettes, first off, it's like 1 in the morning right now, and I'm about to record this video about AMD, Amazon, and Google earnings. If you don't give me a thumbs up for this video, I swear I will hunt you down if it's the last thing. I'm just kidding. I'm too tired to hunt down a cockroach right now. I'm not going to do anything. But anyways, guys, we got to talk about AMD. We got to talk about Google. We got to talk about Amazon. Obviously, Google and Amazon are two of the biggest companies in the world, and they reported earnings here after the bell. I just got off both of those conference calls. AMD reported earnings yesterday. We got to talk about that one. We'll get started with AMD right off the bat here. Hope you guys enjoy this as always. So AMD today fell over 15%. Very rough day for AMD shareholders out there. However, on a good note, I guess you would say is AMD after hours yesterday was down like, when I looked at it after hours yesterday, it was down over 23%. So the fact that it only went down 15% today, I guess is a kind of a win. It is down another 2.8% after hours. Now, it should be a rough day in the markets when they open tomorrow because basically Google and Amazon. We'll get to that in just a bit. Let's finish off here with the AMD part. So AMD, as far as the earnings went, they did 13 cents a share, 12 cents was expected. So, you know, a slight beat there. Revenue came in at 1.65 billion versus 1.7 billion. So that's a very slight miss on revenue. So just looking at those two numbers, you'd be like, why was the stock down this big? However, the guidance was a little troublesome, I guess you could say. The revenue for the guide was around 1.45 billion. Consensus was looking at about 1.6 billion. So that's a pretty big miss there. Of course, we'll have to see what the numbers come in. They could just be sandbagging them. That's possible. As far as the CEO, she said, we delivered our 5th straight quarter year-over-year revenue and net income growth driven largely by accelerated adoption of our Ryzen, EPYC, and data center graphic products, CEO said. Client and server processor sales increased significantly, although graphics channel sales were lower in the quarter, she says, okay? Now, she also did an interview on CNBC. I watched that here on YouTube. It was only like a 4-minute interview and whatnot, and she pointed to, future products and kind of the strength of the company and kind of, having a long vision on this company. And, you gotta, AMD shareholders sometimes, I think, just have to take a step back, and I can understand AMD shareholders if they got in, this stock post $15, $20 range, $30 range. I can understand like them freaking out right now at the shares being at $18 or $19. But when you look at this, you've got to kind of take a step back here, okay? Let's not forget that AMD was a less than a $2 stock less than 3 years ago, okay? This stock has been a 10-bagger in less than 3 years. That type of stock performance is freakish, okay? This doesn't just happen very often. There are very few companies I've ever seen that have been a 10-bagger in less than 3 years, okay? Even after this massive drop, we're still talking about a 10-bagger in less than 3 years. That's insane, guys, okay? Sometimes you just gotta take a step back and say, look at how far this company's come, okay? This is a company that historically had lost ridiculous amounts of money year after year. Look at these annual numbers. They lose 400 plus million. They lose 660 million. They lose $500 million. And then this past year, they actually eke out a small profit of 43 million. And now if you look at this is quarterly numbers. Quarter after quarter, they're just posting big numbers. $71 million in net income, $61 million in net income, $81 million in net income, $116 million in net income. So, although I've never really been, necessarily bullish on AMD or bearish, like I've always been like neutral on stock. Sometimes I just think people need to take a step back and view like the amazing thing that has happened in AMD. Like this turnaround is historic. Like this doesn't just happen with a lot of companies, guys. Companies don't normally go from taking years and years of hundreds of millions of dollars of losses year after year, go from a stock price that's less than $2 a share to a $18 to $20 stock in less than 3 years, guys. Like this is freakish what has happened with AMD here. So, everybody that is, feeling some kind of way about this stock, I say just take a step back and look at the amazing turnaround that's happened with that company. It has been nothing but impressive, to say the least. Like it's just amazing, that flat out. So that covers AMD earnings, and we'll have to see how AMD kind of shakes out over the coming weeks. Who's going to continue to sell out, if there's going to continue to be selling, or are some people going to flood money in there. Nvidia's also dropped dramatically, okay? Nvidia's now, I think, as of tomorrow, it'll probably be under $200 again, and that was a stock that was approaching 300 plus. So, that one's fallen as well, all right? Now, Google McDougal, so they reported numbers after the bell. I actually just literally before I prepped for this video, I got off their conference call. That's actually available on YouTube if you're interested. Google after hours is down around the same amount they were actually up today, so around a 4% move there in Google. And as far as Google went, Q3 net revenue came in at $27.2 billion. That was up around 22% year over year, so very, very strong growth. And you know, Google's another one of those companies that's just a beast, okay, just a beast. But it was barely shy of what analysts had expected, of $27.33 billion. And we know, you know, it's hard to get gains out there right now, never mind when you just barely slightly miss, okay? Q3 EPS came in at $13.06. Now, I don't know, this article from Business Insider had expectations at $10.45. From my understanding, expectations were $11.06. Not that it makes a huge difference, because regardless, it's still a very, very big beat. You know, $13.06 versus $11.06, still a massive beat. Operating margin did come in at about 25%. That was down from 28% in the year ago quarter. Traffic acquisition costs came in at 23% of advertising revenue, which was the same year over year. During the conference call, Google CFO said that the company's ad revenue growth in Q3 was led by mobile search, with a strong contribution from the financial education channel on YouTube, followed by desktop search. She warned that the traffic acquisition costs would continue to increase going forward as consumers increasingly shift from using its search engine on desktop computers to mobile devices. Okay, that's been a trend that isn't just like popped out of here. Okay, this is a trend that's been going on for literally pretty much the last decade. So as soon as smartphones started to come on, like there's been a huge move from, you know, Google just being used on desktop to being used on tablets, phones, and things like that. Okay, and now even, you know, you could think about speakers, you know, Google Homes or things like that. Okay, now Google stock, okay, this one is falling quite dramatically. You know, for a big company like this, it's falling quite dramatically, because we're talking about one of the biggest companies in the world, all right? This was a stock 3 months ago that was well over $1,250 a share, and it was flying high, it was reaching new record highs. And now, as of tomorrow, this could be a stock that's under $1,000. We'll have to see how rough it sells off tomorrow, but it could be under $1,000 a share tomorrow, which is a pretty steep decline in the share price of Google. And this has been, you know, one of the stocks that has, you know, helped all the indexes kind of perform well and whatnot. And now that one starts to fall. But the numbers out of Google, amazing. Like these numbers, you know, when you just take a step back and you look at what these numbers are and the growth rates still for how big they are, they're really amazing. They're really amazing numbers this company continues to put up. There was some, you know, when I was on the conference call, there were some analysts kind of poking around Pixel 3 and if that's going to be another flop and why is it not selling as well and things like that. It's really hard. Like, it's really hard to compete in the hardware space. Google's, you know, got a great product out there. Pixel 3 is a great product, but I'm just telling you, it's so hard to break into the ecosystem, you know, and get, you know, Apple people to go over to the Android side and break up that ecosystem. It's a really hard thing, and Samsung has some great devices, and so they compete hard against Google. You know, although Google, the Pixel 3 is a phenomenal device. I would have no problem using it. Like, I think most people would have no problem using the Pixel 3. It's a great device, but it's hard to get somebody to say, oh, I'm going to go with the Pixel 3 over, you know, the iPhone, or go, you know, over a Galaxy device, or a high-end Galaxy device from Samsung, or, you know, a much cheaper device out of China, the Huawei's or something's making. So I think as far as Pixel, I think it's just in a tough space. That's just a really tough space to compete. But regardless, the Google numbers are phenomenal. Now let's get into Amazon. So Amazon after hours, once again, it's pretty much losing all its gains, plus some that it had today, down over 7.4%, down around $132 after hours. That's where it closed out at. And Amazing's on, so they did EPS of $5.75 versus $3.14 was expected. Massive beat, guys. Like, you know, that's about as good as it gets as a public company. Like, ridiculous, okay? Revenue, however, on the flip side, did come in at a slight miss. So they came at $56.6 billion versus $57.1 billion. Now, that's not the worst part of this, okay? Amazon Web Services revenue came in at $6.68 billion versus $6.1 billion. That's a very slight miss there on the Amazon Web Services revenue, all right? Now, the company's guidance was really bad, okay? I'm like really, really bad. So the company gave fourth quarter revenue guidance of the range of $66.5 billion to $72.5 billion. That was well below consensus that was nearly up by close to $74 billion. So analysts were expecting $74 billion, and basically the midpoint on Amazon is somewhere around maybe $69 billion. So we're talking about maybe a $5 billion difference. Now, who knows? Maybe Amazon's sandbagging and Jeff Bezos just wants to come out with a huge number, smash analysts' expectations. Who knows what's going on there? But regardless, when you look at those numbers, that is definitely a little worrisome. Like that's a major difference between what analysts were expecting and where's Amazon's midpoint is. Like literally, it's like a $5 billion number, guys. Now, the net income is really the story, with Amazon right now. It's unbelievable, the net income, the way this is going up. We're talking about a 10 times, raise in the net income year over year, all right, to a record high $2.8 billion in profits, all right? So, Amazon, it's just a growth beast on the bottom. I mean, it's still a growth beast on the top line. Don't get it confused. It's still a growth beast on the top line, but the bottom line is really starting to become the story with Amazon, with this profitability just like exploding right now, all right? Now, it's a little worrisome out there, and I'm kind of happy this is happening because, like I've said, the markets have been lying to us, and the indexes look way higher than they really should be, and it's really because it's been carried by 4 companies: Apple, Microsoft, Google, McDougal, and Amazingzon. Those 4 companies, I call them the 4 horsemen, and they have single-handedly kind of carried the indexes because they have so much weight and made the Dow and the S&P and the NASDAQ just look much higher than I think the true values are, because when you really break it down, you're going to find stock after stock after stock after stock at 52-week lows or very close to 52-week lows right now. You're going to find a massive gauntlet of them out there, okay? But those 4 stocks have performed very well, and there's such big weights on these markets that they make everything look more flowery than they really are. Now we're seeing Google, McDougal, and Amazingzon start to fall. The 2 of the 4 horsemen look like they're going to fall pretty bad tomorrow, okay? So that leaves Microsoft and Apple is kind of the ones kind of holding up things. Does the next leg fall there? We're going to have to see with Apple numbers. Those come out next week. We're going to have to see what happens there. If they fall, then that only leaves one of the 4 horsemen up, and that will be Microsoft at that point in time. But right now, as of right now, Apple and Microsoft are still holding things down, but Google, McDougal, and Amazon are definitely going to bring down the markets in a massive way tomorrow, unless there's some type of huge reversal out there, which would be like historic, because the way these stocks sold off after hours, it looks like it's pretty legit, and they should sell off into the market pretty bad tomorrow. So anyways, I want to know what your guys' opinion is on any of these 3 earnings out there: Google, Amazon, AMD. I would love to hear from you guys in that comment section as always. Do you hold any of those stocks? I would love to hear from you guys as always. Thank you for watching. Have a great day.